Hello and welcome to the second season of Future of Global Trade, and today we are discussing the supply chain management, its evolution, importance both in terms of physical as well as financial supply chain. Now remember, this is the backbone of any manufacturing business, and the expertise really lies in an efficient supply chain translating into profitable value chain. And the key concepts that are also required for this are just in time and time value of money. To discuss this very interesting topic with us, we have a special panel, and joining us are Surat Sengupta of HSBC India, S. Regunathan of BASF India, S.G. Murli, TVS Motors, and Sunil Makharia of Lupin Pharma. Gentlemen, so good to have you on the show. Let me start with you, Mr. Sengupta. We have this panel which represents most of the truly global companies, and the aspirations of Indian companies to globalize is just getting stronger by the day. How do you see this evolution of supply chain? How important is it? And what is the future opportunity that we are seeing here?
I think that's a good place to start, is the word global. I think supply chains over the last couple of decades has evolved into being truly global. It started off with the buyers in the mature economies and the suppliers from the emerging economies. But it's gone forward from that, because you went from buyer tier 1 into tier 2 into tier 3. So you now have buyers in the emerging economies as well. So it's become a complete intersection of a supply chain. And what that means is that more and more the physical supply chain and the financial supply chain are coming together. Because earlier you would just look at supply chain from a perspective of where would you buy from or where would you sell to. Now it is where would you buy from, what is the cost of buying there, how do you keep the supplier healthy, what is the cost of financing that. All those pieces come into play. And the third and most important thing by becoming global is any economic shift, any currency fluctuation is now affecting these global supply chains.
Of course.
And companies which are able to manage these in an agile manner are really managing their supply chain much better. So those are kind of some of the trends that we are seeing. But clearly it also offers huge opportunity, because for companies to go anywhere and find out where they would buy from, who they would sell to, it's completely global. So finding new markets, lower cost places, etc. So the opportunities are really immense.
Yeah, and there are lots of factors also driving this. So Mr. Murli, you are in a very competitive space. Automobile sector has been always watched out, and they are also the ones which give the first signals of a downturn or an upturn in an economy. How do you maintain the competitive edge in this environment vis-a-vis the supply chain management?
One, what is important in a manufacturing company, and especially an automobile company, is you need to invest for long term. You can't mortgage your future. So even in a downturn, you need to make sure that your supply chain is robust. You need to invest behind R&D. You need to invest behind innovation. And you need to keep your R&D going. You need to make sure that the new product development takes place. So that is what we need to do in a downturn also. And what you said is absolutely right. We are truly global. We export to more than 50 countries. We import components from several countries. So you need to manage the global supply chain very well. And what is most important is make sure that supply chain is absolutely lean. And we need to manufacture today what was sold by the stockists or the dealers yesterday. We need to buy today what is consumed in my factories yesterday. So this is where I think we need to link the extended supply chain, both the front end and the back end. And with the IT help, I think it's a lot more easier now. So that is where we need to be very, very careful and make sure that manage the complexity well. So any complexity always breeds obsolescence, brings hidden cost, and brings inefficiencies. So you need to cut the tail. You need to focus on complexity reduction, focus on lean manufacture, focus on just-in-time manufacture, and make sure that working capital is absolutely thin. Unlock the assets across the supply chain.
That's right, and time value of money at the least amount of working capital, but not impacting the revenue stream and the business as well. So balancing out a lot of these factors. But Mr. Makharia, you have a more complex structure here.
Yes.
An India-based company, subsidiaries globally. you not just procure raw materials from overseas markets, but you also send some of the raw materials to your overseas subsidiaries, and then you consolidate all the books. How does the entire supply chain really come about, and in this complex environment, how have things evolved over the years?
Nisha, I will just correct here. It's not that we supply the raw materials, we supply the finished dosage. And here I would highlight our subsidiaries which are in the US and the Europe business, which contributes about 49% of our top line. So the manufacturing here is in India and the customers are in these countries. So we supply to our subsidiaries, and in turn the subsidiaries sell the products to the customers. The most, I would say, the foremost challenge for us is to ensure that in those countries where to maintain the timelines and the time schedule is very important, we don't lead to the situation of the stock out. So the biggest challenge for us to make a proper fine balancing in such a way, keeping the various factors in mind, so that there's a cost of the warehousing in these countries, time needed for the shipments, accurate forecast or the past trend of the demands. Various things we keep in mind, and accordingly we decide how much inventory we should keep at the manufacturing locations, how much inventory we should keep at the subsidiaries abroad, particularly in the US and the Europe. You said, you touched upon the consolidated accounts, and I would just, this again is a very typical situation. When we sell to these subsidiaries, naturally the sale is booked in India, and accordingly we'll have to provide the tax in India for that. So when we consolidate the accounts, the situation comes, we are providing for the tax even on the unsold inventories, resulting into the higher tax outgoes and resulting into the higher effective tax rate. So that also factor we'll have to keep in mind while managing the overall supply chain, so that we should maintain the proper balancing between the supplies from India and the stock to be maintained here, so that unnecessarily we don't lead to the higher tax rate also.
Mr. Raghunathan, coming to you, you are a company which is a global company. Given your global expertise, tell us, how is the Indian setup different, and what are the differentiating factors do you see?
So, as you know, BASF is operating in almost all the countries in the world. So, I think the challenge on supply chain, ensuring that the products reach either the invoicing locations or the producing locations in time, is a constant focus. Now, what we have done is, over the years, instead of each unit deciding how to handle this supply chain, now more and more it is being centralized, so that the economy of scale is there, and we are able to be state of the art in terms of providing the tools which are necessary to supply across. You know, you are talking about a 68 billion euro company, and that products had to reach everywhere in time to be with EHS standards being adhered to. So for this, I think one single thing which I would like to sort of bring home is, we have one system now. Earlier we had 5 systems in 5 continents. Now we have one system based in Germany. That means anybody who is wanting to have a product in, let's say, Nigeria, will have the same way to look at their when it is reached and what are the delivery schedules, etc. So this, over a period of 6 years, we developed an excellent tool which helps us to reach the product at the shortest possible time, and hopefully at the shortest cost also.
All right.
So this is our aim.
All right, on that note, we'll slip into a short break, but when we return, we'll tell you all about what can make you the future leader in supply chain management, and our special panel will be discussing just that. Stay tuned with us. Welcome back. You're watching a special panel discussion on the future of global trade and the importance of supply chain management in that. So, Mr. Raghunathan, of course, cost of finance is so important and interest rates have been on a rise. We have seen this year, nobody is expecting the RBI to cut rates too soon. And working capital always comes at a premium to the long-term finances. How do you manage your finances in this scenario?
Let me address this from an Indian point of view. I mean, globally the situation is different. I think in India, first of all, I think you will be surprised if I make a very solid statement on the customers don't feel obliged to pay. So you end up following up and you have to give all sorts of incentives. And so
that system still exists for big companies as well? Okay.
No, I think it is more to do with the downstream customers. And so having said that, I think it is important that we play the card correctly. And not to as Murli rightly said, sometimes we go one step and then help them get certain facilities from the bank so that we are benefited and we also with our name, on a non-recourse basis, we try to help them with banks. And coming back to the earlier point which you mentioned, Avjit, that when you talk about the supply chain, what can be done from a bank, I think we use some of the facilities which they offer. For example, with regard to warehousing, document warehousing, which is very useful for supply chain in smooth operation of supply chain. So this is one of the examples where really we benefited from the banks.
That's right. What also impacts, Mr. Kanhaiya, is the currency dynamics. How much of hedging, all that also goes into a play when it comes to your supply chain management with other subsidiaries?
I would say currency hedging, of course, is one of the most important activity of the treasury functions, and that's a continuous activity also. We always take the net positions. So we are the net exporter. In fact, 70% of our revenue comes from the international business. So we are the net exporters. So we take the positions on the basis of the net exposures. So we don't specifically enter into a forward contract against the imports liabilities or against the payables, but on overall basis, on a net basis, we enter into a forward contract, and that's a very challenging job of the finance function also. So that's we do on regular basis, of course.
And what you said is most important. Quite often people confuse the treasury operation, and then the main job of a treasury is to provide cost-effective funds and manage the cost and margin. We should not end up start speculating. If we start speculating, taking positions on currency without even underlying transaction, then that is going through a suicidal path. So manage the net exposure, hedge your risk, do the risk mitigation properly. Never get into the temptation to take positions, take a view, okay, currency will go up and down, and depending on your view, take a call. You're not a bank. That's the bank's job to take positions. Manufacturing organization, the profit should come from manufacture, sale of products.
And everything else should be taken care of by the infrastructure and other vendors and banks. Now,
you have to manage the risk. Manage the risk. Don't get into the temptation to speculate on currency. What he said is absolutely right.
So it's not about speculation, but Mr. Sengupta, over here, bank's role is very important. And I've seen many companies having forex losses, putting that in, and then they had to go in for hedging their positions. And not everybody is an expert in that. Very few companies have that inbuilt expertise. How does bank help? And also in translating money in real time so that the conversion costs could be minimal.
I think both your points are very valid. I think Mr. Murli touched a key point. I mean, ultimately, it is not about speculation. Hedging does not start from after you incur financial losses. Hedging starts from the fact that there is a currency risk. What is your underlying? And according to that currency risk, are you taking a correct hedge to make sure that that is inbuilt into your cost and you have taken a position which makes sure that your underlying is covered? As long as you are doing that without getting into speculation, I think hedging is the perfect tool to mitigate currency risk, and that's the only way to do that. I think banks and corporates work very closely together, and it is incumbent on both the banker and the corporate that we do this in a manner which is right for the company and right for the bank, because ultimately there are no short-term gains in this. What you need ultimately is a long-term effective hedging solution which is very much available, and that is where I think banks also need to look at the suitability of the person who's dealing with them, and whether that they understand the hedge that is actually taking place, and that is very clear that both sides understand the hedge that is taking place.
Of course, and it has implied cost also, yes.
Correct. And I would add the overall objectives and the purpose of the hedging should be to protect the budget rate, not to enter into not for the purpose of speculation or making any profit, but because it's very difficult to project the exchange rate.
The future of supply chain management is evolving fast, and what are the growth opportunities in store? We'll talk about that when we return after this very short break. Welcome back. We are discussing the future of global trade, the supply chain management, the future as well as the challenges ahead in this particular space. Mr. Raghunathan, when we are talking about currency dynamics, there's another area in which you can bring down your cost of operations and production is the accounting that you do. So you are a man of numbers. There are various accounting mechanisms for accounting for the inventories like first in, first out, last in, last out, and various others. What are these trial and error basis the companies come down and boil down to this, because they still make mistakes after all?
No, I think by now with the systems in place, these are all, I think you have to define how you want to do that, and depending upon the situations on the particular need of the company, these are all, I think systematically it is arranged, especially if you ask about a chemical company. These are all already clearly laid out, and we have to, only the implementation has to be ensured, but you have to spend time establishing the correct procedures, controls, mechanism to ensure that we go according to the policy and what is. For example, if you are asking about let us say the lead time of say 90 days. Now it is each and every one, even for imports, have to ensure it is available in time, because sometimes the cost stock ticking the moment it is shipped onto the vessel. Yeah. So I think it is important that we are able to track it right through, and there is a participation and clarity on who is doing what, and ensuring that this whole seamless work goes very well to achieve the objective of reducing the cost.
Right. Mr. Murli,
yes. Globally competitive world, you have to be a cost leader. Quite often, I think that most of the companies, they make a mistake of looking at costs in silos. It is, what you need to look at is the wall-to-wall corporate cost. It is just not the material cost. It is the material cost plus the conversion costs. Then based on this, you decide whether you want to make it internally, or whether you want to outsource part of the manufacturing activity. Then you need to decide. So we were talking about global supply chain, managing the working capital outside of India. There is no point in managing the working capital and then incur air freight. So you need to look at the wall-to-wall corporate costs and manage the costs well.
And what do you think are those challenges which, if found out, you will probably do more exports, or you will indulge more in global trade?
Well, in terms of the product quality, I think we are truly world class. Certainly, the cost of transaction in India, if it can come down, where the banks can certainly help, we can be even more competitive. In terms of the product quality, I think we are second to none in the world now. And India has the capability to manufacture world-class products. The fact that we are exporting to more than 50 countries is a testimony to that fact. And wherever we export, the products are well received. So quality is not an issue. Cost of material with the global trade now, certainly it is almost equal. Okay. But the transaction cost, if it can come down in India, that will certainly help the manufacturer.
If the demand grows, Mr. Sengupta, do you think that the transaction cost will come down? And are you seeing increased demand and more aggression, more aspirations from the companies? How's the trend been?
It's a huge play right now. I mean, there's a massive demand. And one of the things that I'm seeing, and personally I've spoken to a few companies recently, where companies are increasingly asking banks for industry benchmarking. So what is my competitor's supply chain looking like? How much cash is trapped in my supply chain vis-a-vis my competitor's supply chain? Because banks have a holistic view of various companies across the industry, and that's clearly something companies are demanding from their bankers. So it's, and if you can release some of the cash by making it more efficient, then that itself reduces some of these transaction costs, which Mr. Mulli alluded to. So that is definitely going to happen. It is happening as companies use the scale to compel banks to work with them. I think this is a natural fit which will ultimately bring down transaction costs.
All right. So, Mr. Kanhaiya, the final comments on how do you see the scenario developing, and what are those requirements that can still be filled in for more effective supply chains?
For more effective, for us, I'm talking the context of the pharmaceutical industry, of course. How fast we can dispatch the materials. So that's the key for us. So whether we have to air freight the materials or whether we have to send by ship, that's the key decision for us. In terms of the financing requirement, I don't think we need
pharma companies don't need.
It's so, and overall our working capital also have come down substantially. But having said so, we take the advantage of low cost of fundings many times, which are available from the banks like HSBCs, which like import financing or export financing. We do avail that. I think nothing specific, I would say.
And Mr. Raghunathan, do you think that there could be more like the government policy and the changes in that, as well as bilateral trade agreements, WTO, all those play an important bit, and probably you will boost your global trade if some of those issues are also sorted out?
I think definitely. I think BASF would, India is the second growth pole in Asia. So there is a clear willingness to put more money on the table. But what is needed is some conducive environment, especially, if you look at the plethora of regulations, lack of a single window for any projects. I think these all are a prerequisite to attract more investment. And talking about the export, we are exporting about 10% of our sale. Now this can be easily doubled if only we can have a very good, quick response to customers through a much more effective way of reaching the product. And secondly, it will definitely help for multinational companies if we are part of the global community in terms of being a member of OECD, and this all helps. That gives that amount of comfort level to the investor. Okay, we can without any fear or favor, we can go and invest money. I think the potential is huge. It's few changes here and there in terms of making quick decisions, irreversible decisions. Sometimes you go halfway through the project and you realize that we have to do something more.
That's right.
I think these are all small steps that will go a long way in attracting the investments.
And probably a strong and decisive government will help in that as well.
Certainly.
Very clearly.
When we are talking of transaction costs, you're not just talking of cost of finance, even the infrastructure.
Of course.
There is no point in getting shipments and then we wait for the ship to be cleared in the port condition. All these things, transportation, everything has to improve.
That's right.
And India, we have the advantage of huge domestic consumption. So because of that, we can get scale. The scale economies can bring down the cost. So we are not necessarily dependent on export to bring down the cost, but export can certainly drive efficiencies. We can truly benchmark But the huge domestic base itself will help us to get the scale advantage.
All right. On that positive note, we've come to the end of this very interesting discussion, and the House is united that yes, there is going to be more euphoria when it comes to global trade by the Indian companies, and supply chain management is something that is improving and evolving very fast, and lots of opportunities are right there, and especially with banks also offering many solutions and IT companies also giving a lot of efficiency that is being provided to the companies. So with that, we come to the end of this discussion. Gentlemen, so good to have you on the show, and thanks so much to our viewers for joining in.